Have you ever wondered what's really going on inside a big company? Beyond all the flashy marketing and press releases. Well, the real story, the truth, is in their quarterly earnings report. It's basically their official report card. And today, we're going to decode one together using a real example from Bajaj Housing Finance. And I promise, by the end of this, it's going to seem way easier than you think. Okay, so let's dive right in. Now, I get it. At first glance, a document like this can look, well, pretty intimidating, right? It's just full of corporate jargon, endless tables, and that super tiny fine print. But don't you worry. By the end of this little explainer, you'll know exactly how to cut through the noise and find the stuff that actually matters. Because that's really what this is all about. You see, behind every single number, every line on a chart, there's a story. A story about how the company's doing, its overall health, and maybe even a hint about its future. Our job today, it's to learn how to read that story. And we've got a super clear roadmap for this. First, we'll look at the company's report card. Then, we'll decode the profit story. After that, we'll run a quick financial health check, learn how to read the fine print, and finally, we'll get the auditor's verdict. So, let's get started. All right, first up, the company's report card. Now, think of this just like a news article. The most important information is always right there at the top. You don't have to go digging through pages and pages of data to get the main point. The company actually tells you, right up front, in its press release. And here it is, the big headline for Bajaj Housing Finance this quarter. Their profit after tax jumped by 21% compared to the same time last year. It hit 665 crore rupees. So what's the big takeaway here? Simple. The company had a really good quarter. 21%. That is the key number, the one that grabs all the headlines. It tells us the company is growing its profits at a really healthy pace. But, a single number, even one that looks this good, it just doesn't tell you the whole story. We need to understand where it comes from. So let's get into our next section and do exactly that. We're going to decode the profit story by looking at the official financial statement. This is where we go from just the headline to seeing the actual evidence. This table here breaks it all down nice and simple. Think of it as a super condensed version of what's called the statement of profit and loss. At the top, you see total income. That's all the money the company brought in. Then you see total expenses, everything it costs to run the business. So you take the income, you subtract the expenses, you account for taxes, and boom, you get the profit after tax. And look, the numbers are right there. Almost 665 crore this year compared to 548 crore last year. That right there is our 21% growth. But here's the thing. Making a profit in one quarter is great, for sure. But being a stable, healthy company that can handle a few bumps in the road, that's a whole other ballgame. A profitable company can still be a risky one. So we've got to look beyond just that one profit number. And that brings us to our financial health check. This is where we look at specific ratios that are kind of like a doctor checking a company's vital signs. They tell us all about its underlying strength and stability. For a company like Bajaj Housing Finance, which is in the business of lending money, one of the most important vital signs is its level of non-performing assets, or NPAs. Basically, these are just bad loans, money they've lent out that, well, they might not get back. A high number of bad loans is always a huge red flag. And this chart just lays it all out for us. Their gross NPAs, that's the total value of all their bad loans, are just 0.27% of all the loans they've given. And the net NPAs, which is after they've set aside money for those bad loans, is even lower, at just 0.11%. Honestly, these are incredibly low numbers. It tells us their loan book is super healthy. They are very good at making sure they get paid back. Okay, next up is something called the capital adequacy ratio. The easiest way to think about this is as the company's financial safety cushion. It's the extra cash they keep in reserve just in case of any unexpected losses. Regulators actually set a minimum level for this cushion to make sure a company doesn't just collapse if things go south. So, how big is Bajaj's cushion? Well, on the left, you can see the bare minimum required by law, which is 15%. And on the right, that's Bajaj, sitting pretty at over 23%. This means they are way better capitalized than they need to be. They have a really strong buffer against any financial shocks. It's just another crystal clear sign of a healthy, well-run company. Okay, so we've checked out the headline profit, we've looked at the company's health. Now it's time to put on our detective hats and dig into the fine print. You'd be amazed what you can find in the notes to the financial statements. They add all this extra color and context to the numbers. For instance, these reports aren't just about money, they're also about people and how the company is run. Buried in the notes, we see that the company appointed a new independent director to its board. Now, why does that matter? Well, it's a key piece of information about the company's leadership and oversight. It shows they're actively managing their governance. And here's another great one. Under a section called Exceptional Items, there's this one-time charge of about 13 crore rupees. The note explains it's because of some new government labor laws. This is a perfect example of how real-world events can directly hit a company's bottom line, and why it's so important to separate these one-off things from their normal day-to-day business. So, we've seen the profits, we've checked the health metrics, we've even found some interesting bits in the fine print. It all seems to paint a pretty clear picture. But this brings us to the biggest, most important question of all. How do we know any of this is actually true? And that's where our final section comes into play, the auditor's verdict. You see, every public company's financial report has to be checked by an independent third party, an auditor. Their entire job is to verify that the numbers are legit. In this case, the report went through what's called a limited review. Now, that's standard for quarterly reports. It's not a super deep dive audit, but it is a professional check to make sure nothing looks obviously wrong. And what's really interesting here is that it was done by two separate auditing firms working together. That's your first layer of trust right there. And these aren't just some names on a piece of paper. Right there on the documents, you can see the official stamps of the two firms, Singhi & Co. and Mukund M. Chitale & Co. That's their professional seal of approval, showing they've reviewed the whole thing. And here is their final word on the matter. Now, I know it's written in that very careful, formal language, but the key phrase is right here. Nothing has come to our attention that the statement contains any material misstatement. In plain English, that's a clean bill of health. It's the auditor's official way of saying, yep, we checked, and as far as we can tell, you can trust these numbers. So let's do a quick recap of our little framework here. To read any earnings report, you start with the press release to get the big headlines. Then, you use the profit and loss statement to see exactly how the money was made. After that, you check key health ratios like NPA. Then, you dive into the notes for all that important context. And finally, you look for the auditor's report to get the final verdict on trust. It's that simple. You officially have the toolkit now. You can decode these complex-looking documents and actually understand the story the numbers are telling. You can look right past that intimidating format and see the real performance